And good afternoon, ladies and gentlemen. This is Jose Tormos, your presenter speaking, otherwise known here with Market Traders Institute as FX MVP. The MVP stands for Man versus Pips. Join me today as I go over the Double Helix presentation. We just went over this with our client-only webinar presentation last evening. Today we are doing a short and thorough review of the Australian yen, Swiss yen, and we're going to also throw in the New Zealand Japanese yen pair just for a bonus. So you can see what our clients go through and what expectations can be set with what type of trading activity we present to them on a weekly basis. Allow me to continue moving forward here with our webinar presentation. Now, ladies and gentlemen, before we move forward, I want you all to know that please note the information contained on this broadcast is provided as general market commentary and does not constitute investment advice. It is provided for the sole purpose of assisting traders to make independent investment decisions, and therefore you should not invest money that you cannot afford to lose. With that being said, remember to plan your trade and trade your plan. Let's move forward here into the live market and take a look at what our Double Helix presentation is showing us here so far. This is what you're seeing, the Australian yen monthly time frame. Again, we'll go over this in greater detail when you are a client of Market Traders Institute in our client-only webinars. But in a nutshell, we are stuck between levels of resistance and support, and we are taking a trading opportunity here bearish at resistance to fall all the way back down to support, and this is a 4,000 pip potential move. Now, trading one standard lot, ladies and gentlemen, this is a $40,000 trading opportunity. Now that we've reached resistance, all we're looking for in the smaller time frames is for down swings to take advantage of as we continue pushing forward. So let's drop this to the smaller time frame here from the monthly down to the 120 chart. On the 120 chart, what you're seeing is the first swing potential of that large consolidation move. This was a trading opportunity that I entered on April 24th, 2013. So just over a month here that we've been in this trade, and it has paid out here for our first target. Now we had two opportunities here, a swing trade, which was what you see in front of you, and holding the position for that large 4,000 pip move. You can see here that I've risked 357 pips, and just recently, today, was limited out for 742 pips with a risk versus reward ratio of 1:2, because we set profit plans that allow our traders to achieve success faster than those who do not follow a profit plan. Now, for those who are expecting to pull back, we'll wait for another swing and wait for another entry point. For those that are still holding the position long term, you're still risking 357 pips, but going after 4,350 pips in a move, a ratio of 1:12. This is the power so far of what we're seeing with the Double Helix movement. 742 pips captured today, which equates to one standard lot, $7,400 US traded. Congratulations to those traders who took advantage of that move. Our second part of the Double Helix is the Swiss Japanese yen in the same type of market environment. We're seeing resistance and support levels sideways. Now that the market has reached resistance on the monthly time frame, we see another potential drop here for 2,600 pips in potential movement, which would equate to a $26,000 move if the position is held and successfully completed. On the smaller time frames, we're also looking for down swings to take advantage of as the market continues to wave back down to support. On the smaller time frames, this is what it would look like here as far as a trading opportunity. The first swing trade here is still underway, has been moving sideways, but still the swing holding strong, our stop loss out of the way of the market movement, and we're up on this trade here just about 30 pips right now, and we entered this trade on the 21st of May. Now today being June 5th, 2013, you can say that we're less than 1 month into this trade already. We're still very, very, very early into this trading opportunity. And our first target for the swing trade is at 10200 for the limit. Holding the position will take us again for that 2600 pip movement. Now you can see that our swing trade risk is 198 pips. Our reward is 360 pips, a ratio of 1:2, which is following great equity management. And if we hold the long-term position, we'd still be risking 198 pips, going after 2,000 plus pips in reward, a ratio of 1:13, setting up our clients for continued success, helping them achieve financial success faster than if they don't follow a profit plan. We are currently up on this trade here. And we're also going to throw in a little bit of a bonus today. The New Zealand Japanese yen is also a 4,000 pip potential move, or trading one standard lot, $40,000 in trading opportunities, just like the Australian yen. And as you can see, it has gone from the resistance level, falling back down. We're anticipating, just like we did on the other two positions, down swings where we can take advantage of as the market continues to fall. Now let's take a look on the smaller time frame to see what that shows. You can see here my first swing trading opportunity. I entered this trade on the same day as that Australian yen trade back on April 24th of 2013 here. Today is June 5th, 2013. And you can see that my Australian yen currency pair has already limited out for 742 pips. But this trade here for the New Zealand Japanese yen is up over 500 pips at the moment. We entered the market at 83.94 back on this opportunity here on April 24th. The market moved sideways, and you can see now we are up over 520 pips positive at the moment, going after a target of 697 pips. That's a risk versus reward ratio on the swing trade of risking 261, going after 697, ratio of 1 to 2, practicing proper equity management. And for those who are holding the position, going for that large consolidation move, you'd still be risking 261, going after 3,794 pips, a ratio of 1 to 14, therefore, again, helping our students achieve financial success in these markets faster with a trading plan, profit plan that works and that has consistent backtrack-tested records of identifying the opportunities presented in front of them, taking advantage of the opportunities, and when you practice this type of equity management, you have to lose double, triple, if not 14 times the amount now with this holding position, then you win just to be in the negative. So we want to show traders how to take advantage of the positive movements in the market, and Market Traders Institute is doing just that during our client-only webinars each and every week, ladies and gentlemen. This has been the Double Helix presentation. As of right now, the three positions that are still in are currently up the following. We are up right now on our New Zealand yen 120. We're up right now currently on our Australian yen. Even though the target's been hit, we're still up from our original position at this point in time. And we're also up on the Swiss Japanese yen. Ladies and gentlemen, our positions here at this point in time are the following. We are up for this three trading opportunities at the moment, 1,296 pips. Trading one standard lot with all these positions entered, just three positions. If you would have entered with one standard lot, you're looking at a return on your investment of $12,960 US trading one standard lot. Ladies and gentlemen, this has been the Double Helix Review. Join us during our live client-only webinar presentations, and we'll share with you more on how to take advantage of the markets before the markets take advantage of you. This has been Jose Tormos. Thank you for joining me here in our webinar presentation, and I thank you for your trust. This is Jose Tormos. This is FX MVP.